Hello everyone, and welcome. Today, we are diving into a groundbreaking approach to algorithmic finance, the Recursive Multi-Agent Trading System, or RMATS. Over a rigorous testing period spanning 561 trading days from January 2023 to March 2025, and across a 24-asset universe, we've developed a system specifically designed for iterative portfolio optimization under extreme geopolitical uncertainty. Let's set the stage by looking at the macro threat. We all know that geopolitical uncertainty has become the primary driver of market volatility. Whether it's the SVB crisis, the Israel-Hamas war, US-China tech sanctions, or escalations in the Middle East, rapid sector rotations and capital flight are the new normal. The problem? Traditional quantitative frameworks rely on historical statistical patterns, completely failing to adapt to these sudden structural changes. So, how do we fix this? We have to address the architectural gap. Currently, most AI trading models use sequential agent workflows, like a one-way linear pipeline. RMATS introduces a recursive multi-agent protocol. Instead of a one-way street, our agents engage in looped, recursive communication. They dynamically revise their signals based on peer feedback, prioritizing downside risk control until they reach a strict mathematical convergence. Here is the system blueprint. It's a 4-layer collaborative architecture. At layer 1, we acquire data like market prices and geopolitical events. Layer 2 houses our specialized agents, sentiment, report, analysis, and risk. Layer 3 is the core innovation, the manager agent that orchestrates recursive coordination. Finally, Layer 4 executes the portfolio optimization. The magic here is that agents iteratively revise their signals through multi-round communication until the portfolio weights mathematically converge. Let's zoom in on Layer 3, the manager agent. This isn't just a simple vote aggregator. It orchestrates the recursive loop using a dynamic health score mechanism. The manager assigns voting power to the specialized agents based on their real-time performance, calculating predictive accuracy, signal stability, risk-adjusted profitability, and latency. Now, let's look at the specialized agents, starting with sentiment. RMATS doesn't just read the news. It acts as a difference in differences, or DID, lens. It uses a causal estimator to extract purely geopolitical risk scores directly from market proxy signals. This means it can actually isolate the true stress of a geopolitical event from everyday market noise. Next is the analysis agent, which provides market context. It uses regime classification to determine if we are in a bull, bear, or stress environment. By utilizing a Kalman filter to fuse sentiment and earnings signals, it outputs a highly contextualized composite signal and regime state for the rest of the system. Then we have the ultimate failsafe, the risk agent. This agent operates 3 critical circuit breakers monitoring drawdown, geopolitical risk, and volatility. If any of these gauges go into the red, the risk agent triggers a dynamic covariance lockdown using conditional value at risk, or CVR, logic to protect the portfolio immediately. So, how do all these agents agree? Welcome to the negotiation table. Through the recursive loop, the system forces mathematical consensus. The manager computes a confidence and health-weighted mean from all the agents' recommended weights. The system only locks and executes when the difference between rounds drops below our strict threshold of 0.008. To understand how fast this works, let's look at the microbehavior. In just a single coordination round, we see a massive 95.9% reduction in disagreement among agents. Normally, median convergence happens in 2 rounds. But here is the brilliant part: during times of geopolitical stress, agents actually agree faster, rapidly hardening their defensive stances. Zooming out to macro behavior, we see defensive asset rotation in action. Looking at the portfolio allocation over time, you can clearly see that the moment geopolitical stress is detected, like the SVB crisis or Middle East escalations, RMATS systematically overrides equity exposure. It executes an autonomous flight to safety mandate into fixed income and commodities. To synthesize this, recursion acts as a true capital preservation engine. The math itself is the literal mechanism that detects invisible geopolitical risk, forces immediate consensus, and physically rotates assets away from vulnerable sectors far before human managers even have time to react. Let's look at the strategy diagnostic. Traditional mean variance optimization might capture higher returns, but it exposes the portfolio to catastrophic 15.5% drawdowns, dragging it into the high-risk zone. RMATS is intentionally different. It sits firmly in the drawdown-controlled zone, trading bull market yield for ironclad downside protection. Here is the empirical proof from the 2023 to 2025 stress events. When stacked against baselines like DQN, Finbert, and multi-factor models, RMATS achieved the best outcome in 3 of the 5 major stress events. Most notably, it was the only strategy to post a positive return of 1.15% during the initial Israel-Hamas escalation. This brings us to flattening the curve. If you look at the portfolio drawdown profile, baselines suffered catastrophic drops exceeding -14%. RMATS, on the other hand, maintained an absolute floor above -10%, keeping the most contained drawdown profile across the entire 561 trading day period. We also ran an X-ray on system dependencies to prove what drives this defense. If you remove the risk agent, the max drawdown skyrockets to nearly 15%. If you remove the recursive loop, the Sharpe ratio plummets below 0. And removing the sentiment agent pushes drawdowns past 12%. Every single component is critical for portfolio stability. Of course, we must address the calculated trade-off, capital preservation versus yield chasing. During an AI-driven supercycle where the S&P 500 jumped 60%, RMATS naturally underperformed, showing an annualized return of 0.22% and a negative Sharpe ratio. But this isn't a bug, it's a feature. RMATS doesn't chase beta. It systematically sacrifices top-end yield to guarantee absolute capital preservation when geopolitical reality fractures. In conclusion, RMATS represents a paradigm shift in risk control architecture. It is the first formally specified recursive multi-agent trading loop with mathematical convergence guarantees. By transforming ambiguous geopolitical text into hard, causal portfolio rotations, it achieved a sub-10% drawdown constraint in a highly volatile market. For institutional investors whose primary mandate is capital preservation under extreme stress, RMATS provides an autonomous, mathematically rigorous shield against geopolitical uncertainty. Thank you for watching.